we are at an impasse because one of our books that we rely on, The Innovator's Dilemma, seems to lack explanatory power in terms of explaining why our portfolio should make money. I will discuss this in more detail in this episode. This is the Not Even Wrong podcast. It's November 9, 2020. This is Krim Delco. For the day, the fund is down 5.5%. The market's up 1.2%. For the year, we're up 208.3. The market's up roughly 10%. We're outperforming by 198.3%. We are a little bit at an impasse at this point in terms of our books and our principles that we work with. And since we want to be as diligent as possible, we are discussing the Innovator's Dilemma currently. We are at Chapter 3. I will have another detailed episode about Chapter 3. Today, I want to discuss in more general terms a concern that is rising. The more we're deepening our thoughts back into the Innovator's Dilemma, the more we feel like that the book is lacking some explanatory power. In particular, the book talks about the fact that disruptive technologies usually start at a different marketplace with typically lower performance metrics than established markets, that is the reason why incumbents ignore entrants using those disruptive technologies and therefore get ignored, and then slowly they creep up into the established market. Christensen uses the disk drive industry, and in Chapter 3 he's talking about the earth-moving excavator industry, where he's using the hydraulic technology inventions of the 50s and 60s of the last century and how they disrupted the traditional excavator industry, because the traditional excavators were using cable and not hydraulics. They were able to move large amounts of earth per move. The hydraulics were not able to do that in the beginning. However, they had some advantages, which was they were more precise, they were faster, they used less energy in general, they were smaller, and they could be used for smaller work, such as around the house and things like that. But then slowly they grew into their incumbents markets, which were large excavation jobs, mining jobs, etc. So they disrupted all the incumbents. And this dynamic, while very intuitive in the 90s when Christensen wrote the book, today seem lack explanatory power, because we cannot explain, at least we're struggling, let's say it that way, we're struggling to explain why Tesla is able to penetrate and win in the marketplace. It also lacks explanatory power in terms of, let's say, Amazon, Apple, not so much Square. So we want to talk a little bit about that. We also want to reference back to a David Deutsch paper, which is the theory of experiments and the explanatory power of experiments. It's a paper he wrote a while ago, but it's not important. What's more important is, of course, the context and the content. And in this paper, Deutsch talks about what experiments can do to theories and what theories really are. Theories are explanations, and explanations explain explicanda, which is apparent observations of something. So let's use that framework to look into the Tesla situation. So what is it we're actually explaining? What are the explicanda? What are we trying to explain? Or let me regress a little bit before I go there. It is the purpose of Orange Capital Partners to generate wealth by investing in disruptive technologies with large impact. That is our purpose. Now, how do we achieve that? Well, we achieve that by finding explanations for what generates wealth. This is what we do. This, in a nutshell, we are looking for explanations for what generates wealth in the world out there. We're investors. We're not company builders. We're not digging for mining projects or anything like that. We allocate capital to projects that generate wealth. This is what we do. So we have to find an explanation for what generates wealth so we can do that successfully. This is our job. So in a sense, we are a bit like a scientist who has to find an explanation for something which is happening in nature. In our context, and actually David Deutsch talks about that, he's actually using the analogy of gamblers betting on outcomes in Everettian quantum theory. And in a sense, you could use us as gamblers betting on outcomes in the economy. But I don't want to use the G word. I don't think we are gamblers. I think the odds are extremely skewed to our side if we do our job properly. And the way we should do our job is by finding the best possible explanations for what generates wealth. And in that context also, we have to have our explanations compete and improve. And this is one of those situations we believe that our explanations lack some explanatory power, and therefore we should try to improve them. So let's get back to the Innovator's Dilemma. The Innovator's Dilemma as a book has been instrumental for us and for Silicon Valley to conceptualize what is happening. However, we believe that in particular the Tesla investment is not exactly well explained with the Innovator's Dilemma. So what are we trying to explain? We're trying to explain the success of Tesla in the marketplace. Why are customers buying the cars at high volume? Why is Tesla able to gain market share against incumbents? We are trying to explain why Tesla has an advantage relative to others, seemingly has an advantage because they're gaining market share. We're also trying to explain why competition is not able to catch up with Tesla. We're trying to explain why competition is not able to catch up from the top and the bottom. So we had an episode where we spoke about the threat of low-end entrants from China and how this could impact Tesla. We concluded that that is not a risk because we believe that Tesla is moving down market to the $25,000 car to address that problem. We've also discussed why the incumbents, i.e. particularly the German luxury car makers and the American and Japanese car makers, are not able to compete, and that is because they're competing along a performance vector space that Tesla is dominating through technology. So part of the explanation why Tesla is successful is that through the development of new technologies, in particular the electric motor and the battery, Tesla is able to deliver performance, price performance, cost price performance, and value that is much, much better than the ICE car. So those are explanations that work, that we believe are working well for us. And the problem that we see is they're not well explained with the Innovator's Dilemma. They're much better explained with 0 to 1 and the innovation stack. Let's look at 0 to 1. Peter Thiel talks about what valuable company are you building that hasn't been built yet. Elon Musk asked that question in the early 2000s, and his conclusion was, I'm going to build an electric car company that is going to be a valuable company that nobody is building yet. Why was he able to do that? Because he had an in. He had an in to solve the problem of the battery, which was at that point the largest problem. He then solved the problem of making a bigger battery. He then solved the problem of having a charging network. He then solved the problem of having faster charging, which slowly but surely gets through the point where the constraints that electric cars had, such as range, charging times, are being diminished. And today it's almost equivalent to having a gas car, but you have all the other advantages. So in that sense, there is some explanatory power that the Innovator's Dilemma offers, which is in the beginning, the electric cars were substandard, their ranges were low and the charging times were high, and the charging network wasn't available. So you really needed to create a new market. The new market was luxury electric cars. This was a new market. There was demand for such cars for various reasons, partly because people wanted to decarbonize the energy. Actors and people like that bought the cars, particularly the Roadster. But it really was subpar relative to IC cars on the metric of range and charging time and availability of charging networks. So the word range anxiety was going around. Over time, through sustained innovation, Tesla was able to diminish that risk. And today, I would argue, as a Tesla owner, that risk is non-existent. We have absolutely no range anxiety. We did a road trip from California to Idaho and back, no range anxiety whatsoever. There was a little bit of range issues we had in Ketchum, Idaho, just because there wasn't enough charging infrastructure, and the charging times in the given infrastructure were a little bit high. But I would say it's really not a big issue, and we could have solved that problem, for example, actually with the available charging that Tesla provides you. So you can actually charge from an existing plug and get, let's say, 40 miles per night, and that should get you at the worst to some other supercharging station, or at least a fast charging station. So what I'm trying to say here is that Tesla has closed that gap, and now this is part of the reason why we believe Tesla is now leapfrogging the ICE car industry. So then the question is still there, that we lack explanatory power using the innovator's dilemma, because in the innovator's dilemma you have to come from below. Tesla did not come from below, they came actually from the top. So that is a different concept, it's a different explanation. And I think the innovation stack by Jim McKelvey is a much better explanation for why a company like Tesla has the potential to generate a lot of wealth, because it's working itself through compounding knowledge. And this is the key word, compounding knowledge towards a very large mission. The large mission is decarbonizing energy. So we have a mission which is decarbonizing energy. The exact wording of Tesla is to accelerate the advent of sustainable energy. We have rephrased that in our world to decarbonizing energy. Decarbonizing energy entails that you use different sources of energy, in particular solar. This is the key. You can also add wind and other sources, but let's stick with solar. In order to use solar for energy, you need intermittency solutions, and the battery is the solution. This is where Tesla is putting a lot of their effort. The battery will help intermittency, and therefore solar can be used for all kinds of applications, transport, housing, factories. So this is the big mission. Now let's get back to Tesla today. The market cap of Tesla, or let's say the sales of Tesla, are not driven by decarbonizing energy. They are driven by selling cars. And as we just explained, we believe the reason that Tesla is able to sell cars is because they offer a luxury vehicle, a luxury electric vehicle, which has solved the range anxiety problem. So that was the biggest problem. That was the subpar relative performance to IC cars. That has been solved. So now luxury electric vehicles are at par with ICE cars and offer much better performance in terms of acceleration, cost of ownership, generally price. And this is why Tesla is leapfrogging competition, in particular comparable cars in their classes, in comparable ICE cars. So this, I think, the innovator's dilemma gives you some hints. It's what David Deutsch would call a problematic theory, in a sense that it doesn't explain all the observables, but it gives some hints, and we can fill the other gaps with better explanations, in particular 0 to 1 and the innovation stack. So as a conclusion, we're going to discuss the third chapter in more detail, but for now we just want to say that the innovator's dilemma seems to fall short in explaining some of the dynamics that Tesla is showing. We are filling those gaps with the innovation stack and with 0 to 1. We are not by any means kicking out the innovator's dilemma from a principal stack, because it still helps as a foundational theory, very much like the Newton theory is still very useful for engineering, although we have now quantum physics and the theory of Everettian quantum mechanics and those things, which are much better explanations for reality. But we're not going to throw the baby out with the bathwater, because we can still use the explanatory power of the theory, which is falling short on some of the observables. This is why we still stick with the innovator's dilemma, and why we're still working towards better explanations for some of the dynamics that we're seeing in our portfolio, in particular with Tesla, relative to the innovator's dilemma and other parts of our principal stack. Thank you.